Over one of the IRS interactive tax assistant tools that helps taxpayers understand whether or not the distribution from their traditional SEP or simple IRA is taxable. So you will need some information to go through this. You'll need to understand whether or not the cost basis has been recovered. So cost basis is amounts that have previously been taxed. You would probably be finding those on IRS Form 8606, which is non-deductible contributions tax form. If you're not familiar with that, I'll put a link to the article and the video that we've produced on that tax form in our show notes. You'll also need to know whether or not a specific contribution was made in the same year as the distribution, and whether or not a deduction was taken, even if that deduction was limited. Please be aware that this topic does not address the return of an IRA contribution or the return of a prior year's excess contribution. So, and this is also not for non-residents or dual status aliens. For those taxpayers, you will need to go to the international taxpayers section, which is in a different part of the IRS website. So with all of that, let's begin. All right, so we're going to go to the ITA that will help you understand. And the first question is, which tax year are we asking about? So as we're recording this, we're in tax year 2023. So the only options available are from 2020, 2021, and 2022. So we'll talk about 2022. So as I always like to point out, anything that's highlighted in blue, you can click on it and there will be another pop-up that comes and talks about that specific term. So a return of contribution would be a contribution that you put in and then you took it out. So you're not taking the deduction for the contribution. It's basically a treatment as if the contribution never happened. So you can do this as long as you also include, when you make the distribution, any income that was attributable to the contribution. So let's just say that you put in $10,000 at the beginning of a tax year in January 1st, and then in June 30th, you decide that you're going to take that out for some reason. You can do that, but you would have to also estimate or calculate how much income was in your IRA as a result of that contribution. So if that contribution earned, say, 6% annually, but for that 6-month period it earned 3%, then you would have to withdraw the full $10,000 plus $300, which is the 3%. And then an excess contribution is basically the same thing, except this was a contribution that was never allowed, and you either discovered it or it was brought to your attention, and you're simply recapturing that contribution so that you don't get assessed a penalty. So if you hit yes, then it comes up with a very simple answer. Hey, we told you this is not covered in the tax tool. So you're going to have to go punch a publication, in this case publication 590-A, and do some research to figure that out. So let's go to what type of IRA did the distribution come from. So we're going to select a traditional IRA. And the next question is, was this from an inherited IRA? So let's say yes. Did you inherit the IRA from your spouse? Was it a transfer to something else? An inherited IRA, qualified charitable distribution, a health savings account, or none of these? And then, was there a previously taxed amount? Was there basis in any of the traditional IRAs that you inherited? So in this case, it would be fully taxable, right? So not only does it tell you that it's taxable, it tells you exactly how to record that entry on your tax return. So in this case, you would not make an entry on line A that says total distributions. You would enter the total distribution amount on line B, right? So if that's the only distribution that you have. Otherwise, you would have to include the total distribution amount on line A with your others, and then include the taxable amount on line B. So let's go back, and let's just say that there was basis. Then it would say, is this a total distribution of all traditional IRAs inherited? No. Then it might be partially taxable. You would need to complete IRS Form 8606 to determine the taxable amount, since your IRA includes after tax amounts, right? So let's kind of just take this to a relatively normal, not inherited IRA. So this is not an inherited IRA. Was any portion of this rolled over or transferred? Sure. Let's say that it was transferred to as, let's say this was a qualified charitable distribution. In this case, it's tax-free. So a qualified charitable distribution is basically, instead of putting money into your own bank account, you can take money and give it to a charity. And probably the best way to do that is through a check from your IRA. So if you don't have checks in your IRA, but you do plan to make charitable distributions, then you should order checks, because if you take out a distribution and then turn around and give it to the charity, that might not fit the exact letter of the tax code, depending on how you do that. And you may have to pay tax on that and then turn around and try to claim it as a deduction. The proper and the clean way to do that would be to write a check directly from your IRA to the qualified charitable organization of your choice. That way, the IRS can clearly determine that you never actually received those funds, and then that would make that a tax-free distribution. Let's do one more scenario where oops. So we're going to continue with this. Oh shoot, I might have to refresh this window. So let's start over with this tool. Sorry, let me find this tool again. I mistakenly assumed that it would just start me over at the beginning of this ITA. So my experience in walking through all of these interactive tax assistance videos is that sometimes if you keep going back and forth within the same screen, you kind of get hiccups from previous answers. So if you want to do these scenarios on your own, the best way to do that is to make sure that you kind of completely back up, start over, clear your cookies, do whatever you need to do, and then walk through this a separate instance. So let's kind of walk back to where we were before. So in this case, it's asking you if you made a traditional IRA contribution in the year. We'll say no. Was there a previously taxed amount basis? Was your home in a federally declared disaster area? And again, you can look that up. There's actually a page on the IRS website that lists all of the federally declared disaster areas for tax purposes. So let's just say that we were not. We were not age 59 and a half. So it says not only is this fully taxable, but because you were under age 59 and a half, you might be subject to an additional tax on early distributions. So you would need to kind of walk through an additional tax tool. Do I meet an exception to the additional tax on an early distribution link? But anytime you use this to understand, like this is a hypothetical situation where you can use this information to help better understand your tax return, but Uh, if you use this purely as guidance, unfortunately, you need to you may be susceptible to kind of falling prey to guidance that depended on your input. So the best practice that I would recommend is that for any time you use an interactive tax assistant tool, you print out the answers to your questions. So here's the verbiage that it had on the tax form, but then you're specifically answering IRS questions about your situation. So you can look at this and say, oh, I meant to put in a different tax year, or wait, I did have basis because I found this IRS form 8606 in my tax records. Or this wasn't a traditional account, it was a SEP IRA. I need to restart this. And then once you get the right answer based on, or once you get a summary where all of your questions were properly answered to your satisfaction, then you would want to print that out and retain that with your tax records. So that should help you avoid audits. But if you were ever in an audit situation, then you need to be very, very careful about telling the IRS that you used their interactive tax assistant tool, because the last thing that you want to do is have an examiner find a mistake that you should have caught by going through this printer friendly version preview before filing your tax return. So that's all I have for this video. I'll put links to the articles that we discussed in the show notes, as well as a link to this specific interactive tax assistant tool. So if you like our videos, please subscribe to our YouTube channel. And also, if you're interested, we do write articles about a lot of these tax topics, and specifically about some of the IRS forms that we may cover. So you can go to those anytime you want. Simply go to teachmepersonalfinance.com, type in the name of the IRS form, such as IRS form 8606 for non-deductible IRA contributions, and you'll see a well-written, detailed article that will help you complete that form. So if you have any questions or comments, or if there's a topic that you would like me to cover in a upcoming video, please post your comment or question in the show notes. Thank you very much and have a great day.